How we doing? Hey, hello. How's it going? Good to see you. Good to see everybody. Ed Ponsi here on behalf of FX Street. Once again, welcome to Thursday. Welcome to ECB Day. It is the European Central Bank. Lots of central bank activity going on. We had the vice chair of the Fed announced that he is quitting in the U.S. We had the central bank in Canada made a move yesterday and raised rates, and the Canadian dollar went through the roof. And we just had the European Central Bank on hold. And you can see the little tiny move on the 5-minute. You see that? See that candle right there with the big wick on the top and the big wick on the bottom? We saw a little bit of a reaction to the European Central Bank, but we all should know by now. If you don't know by now, the secret for the European Central Bank is this. You wait for the speech. The speech is scheduled to begin in 25 minutes. So 25 minutes from now, Mario Draghi, head of the European Central Bank, is scheduled to speak. And when he does, that's when it gets interesting. So, will he create a big move in the market? We've seen in the past, we've seen the euro move 400 pips in about 2 hours on a Draghi speech. Not any Draghi speech, a Mario Draghi speech that came immediately after an ECB interest rate decision. And that's where we are right now. We've just had the ECB interest rate decision 20 minutes ago, and we are 25 minutes away from the speech. So here we go, right? Some pretty big moves have occurred in the past, but it does not happen every time, right? We never know exactly what we're going to get. And I guess that's what makes it interesting, right? We certainly have, it's envious, right? It's what we get to do. We get to participate in this amazing, in these amazing moves. So perhaps we're going to get an amazing move 23 minutes from now. So anyway, so we're going to come back. We'll circle back on that. In the meantime, if you do have any questions about the European Central Bank, about Draghi, or about anything having to do with currencies or with currency trading or any type of trading, feel free to ask. That's why I'm here. My name is Ed Ponsi. That's right, Ponsi. The name Madoff was taken, so I went with Ponsi. And so that's why I'm here, to answer any questions that you might have. We'll also look at some charts, and we'll get into other aspects of trading while we wait for the 22 minutes now until Draghi. So I've got the countdown clock going over here. Okay, so while we're waiting, we're going to take a look at dollar Canada. I'm going to flip over to the daily chart. And I'm going to go USD CAD. And what a trend we have here. Let me get rid of this. This is a 200-day moving average. Let me get this out of here. And quite a move, right? In May, we were above 136. Now we're below 122. It's been quite a move. And Bank of Canada yesterday raised interest rates to 1% in Canada. And why? Because the economy's picking up. Remember, Canada is a big mining outfit. And when we see things like this, when we see gold, Look at the chart here on gold, right? Since the beginning of July, it's gone from 1220 to 1340. Look at things like copper. Since mid-June, so really since the beginning of May, copper went from $2.55 a pound to $3.15 a pound. Percentage-wise, that's a huge increase, right? So if you're Canada, you export these things in fairly large quantity. And other metals as well. Silver has done well, not as well, perhaps, but silver has gained from 1550 to 18. That's actually quite good. From the beginning of July until early September. It's only 2 months. It's a pretty impressive gain. So, you think that they're hiring miners? I certainly do. Right? So that's just one aspect of the economy, but certainly there's a lot of money flowing through that economy right now. That's the second rate hike in less than 2 months in Canada. So things are moving in Canada. So naturally, right, a lot of people are getting hired, a lot of people are making money. So what do you think's happening? They're buying homes. And now the price of housing is going higher. So they want to discourage some home buying. So interest rates go up and it becomes just a little bit harder to buy a house, right? Interest rates go up and now a mortgage, right? The mortgage interest rates go up and now it becomes just a little bit harder to buy a house in Canada, right? So, and this was a bit of a surprise. The interesting thing was most analysts did not expect 2 interest rates in 2 months, increases in 2 months. That was a bit of a surprise. Nobody was really expecting that. So the Bank of Canada, the head of it is a guy named Polos, and that's the governor. And his colleagues said, hey, we were surprised that the economy is so strong. GDP 4.5% in the second quarter. Now, out of the G7 is the seven developed economies. Nobody had a stronger economy than Canada's 4.5% growth. In the U.S., where I'm speaking to you from the U.S., we've been below 3% now for as long as I can remember. Canada's 4.5. They're doing great. And that's why they're raising interest rates twice in 2 months. Right? They're doing fantastic. All right, so recent economic data, stronger than expected. And they're saying growth in Canada is becoming more broadly based. It's not just the mining sector. It's not just in one little area. It's spreading out. And so these are the comments from Bank of Canada. They're also saying GDP is higher than we expected. So they got to hit the brakes. They got to slow this train down. This crazy train might run right off the tracks. They didn't say that. I said it, right? Wouldn't it be great if I was a central banker? I'd put that right in the statement. This crazy train's going to go right off the tracks if we don't raise interest rates and hit the brake. So all of a sudden, consumers are spending, employers are creating jobs, real estate prices are going up, businesses are investing in their own businesses, exports are doing well, right? And the era of low interest rates appears to be coming to an end. This also says good things about the United States, believe it or not, because if we're saying exports, if Bank of Canada is saying that exports are doing well, that must be saying something good about the U.S. because 3/4 of Canada's exports go to the U.S. Okay. So if exports are increasing, that means demand from the U.S. is almost certainly rising. If demand from the U.S. is rising, that means something in the U.S. must also be percolating. U.S. also must be improving at least somewhere in the U.S. Something in the U.S., something good must be happening. Okay. And not only that, but if you're at 4.5%, there's a very good chance that Bank of Canada may have to continue raising interest rates. There's a very good chance that the Bank of Canada is not yet finished. Think about it. You really don't want to go above 5%. It's like a car. Imagine a car, right? You are driving your car on a highway. You're constantly hitting the brake and the gas to try to maintain an ideal speed. You have a speed limit, and you may have a minimum speed limit as well. So in the US, very often our speed limit, our maximum speed limit might be 70 or 65 or 70 on certain highways. But we also might have a minimum speed limit of 40, where they're saying if you can't maintain 40, you need to get off of this road. Well, you don't want to go below a certain speed limit, and that's been the problem for most countries now for as long as we can remember. We've had our foot to the pedal, our foot to the floor on the gas, trying to get above the minimum speed limit, just trying to get 2% growth. But here's Canada now flying, and they don't want to go 100 miles an hour or 120 miles an hour. Because what happens when you start going that fast? Well, it's much more likely that you're going to crash. It's much more likely that you're going to become out of control. Let's put it that way. Out of control. And you want to maintain control. So usually in a developed country, you don't want to see growth above 5%. Now, an undeveloped country or a developing nation, like let's say Brazil is a developing nation, right? Mexico, developing nation. You really wouldn't mind seeing growth above 5% in China, in Brazil, in Mexico, in India, because those countries still have a long way to go before they are developed, like a G7 nation, like Canada, like the United States, like Germany, right? And so Canada, United States, Germany should not go above 5%. But countries like China, they're still developing. Brazil, Mexico, India, those countries, if they grow at 7 or 8%, that's okay, right? Because they still have a lot of room to grow. Okay, so I hope we understand the difference between developed and developing and how all that works. So anyway, as far as Canada is concerned, USD CAD, Canada's strongest kid on the block right now, just crushing the US dollar. We said the other day, 120 looks like the point where it's finally going to turn around. I drew a line here at 120. It's a really big support area down here at 120. So I do think this still has room to run. It did blast through this area right here. I didn't even bother drawing a line here. I'll put this on the weekly. Did not even bother drawing a line right here, because I just did not believe that was going to hold, and it didn't hold. That was at 122.60. Shot right through there pretty nicely. If you wanted to go to the bottom of this wick, we are right at the bottom of that wick right now at around 121.40 or so. I don't know how significant that is. I mean, look, the price has to get tired of falling at some point on dollar Canada, but I do think it has legs to go to 120. And there are probably orders down there. If you think about it, when's the last time the price touched 120? It's been over 2 years. So it's such a huge round number. There are almost certainly orders down there. How do banks and brokers make money? They make money when orders are executed, right? That is that's the reality of the situation. So I wouldn't be surprised if there are orders down there, and therefore, if there is a rally here on dollar Canada, I'd be short, aiming for 120. That's how I would play this. I think you're talking momentum here. Question coming in: Pound New Zealand, Aussie New Zealand trades are working on the 10 EMA. Good old 10 EMA. This has been the summer of the 10 EMA, hasn't it? We had Aussie yen, right? We had Euro pound, and now let's take a look at Pound New Zealand on the 10. Of course, I always referred to that trade as the FXED trade, because I figured if Bollinger can name bands after his last name, I could certainly name a trade after my first name, right? But anyway, yeah, look at that nice bounce off of the 10, two consecutive days there. Isn't that great? So Pound New Zealand on the 10, ringing it in there. Because New Zealand very weak right now, right? New Zealand soft commodities definitely not hauling the mail the way the hard commodities are right now. Here's Aussie New Zealand, just a lot of continuity to this one, right? And another nice bounce yesterday here, Aussie New Zealand on the 10 EMA, right? Just sweet bounce there, and what a nice move. So I'll tell you, this is the year of the FXF, the year of the 10 EMA, the summer anyway of it. Can't argue with those charts. All right, can't argue with the charts. Thing of beauty. 9 minutes till Draghi, ladies and gentlemen. We'll get to Draghi's. We'll get to the Euro USD charts momentarily. Before we do, I just wanted to catch up on economic data, clean up all the clean up all of our loose ends here before Mr. Draghi speaks in 9 minutes. Overnight, trade balance was a little bit, when you look at these things out of Australia, retail sales and trade balance, why do you think people don't care as much about this stuff out of Australia? Because when you see the price of copper going through the roof, all this stuff becomes rearview mirror stuff in Australia. I'd be a lot more concerned if this was Great Britain, right? But it's not. It's Australia. And there are bigger things happening in Australia right now than retail sales and trade balance, right? Industrial production in Germany, this is kind of a big deal. They only give it like very short, very little importance here. But really, if you think about it, Germany, most important of the European economies, and a huge exporter, one of the biggest exporters in the world. And everything that they export, almost everything that they export from Germany is made in a factory. Therefore, industrial production is very important. Industrial production misses the mark in Germany. So I would give that a bit more importance than just that little. Mentally, I'm giving that at least orange, right? So industrial production, disappointing this morning in Germany, right? Whereas, if it was France, no, who cares? right? France is not Germany. But when you go to the hospital and you get in one of those CAT scan machines, that's Siemens. That comes from Germany, right? All right. Great Britain, housing price indexes, strong in Great Britain. That's good for them. GDP throughout Europe, almost exactly in line with estimates. Europe's GDP. But nobody's talking about that. Everybody's talking about interest rate decision. Looking for zero, you get zero. Deposit rate to zero decision. Looking for negative 0.4, you get negative 0.4. Deposit rate is that's the interest rate that a bank would get for depositing money with the ECB overnight. You and I cannot open up an account with the ECB, but Santander can deposit money with the ECB, but if they do, they get a negative interest rate. Why? Because the ECB does not want their money. The ECB wants Santander to keep their money and hopefully lend it out to somebody. Okay. Jobless claims are coming in a few minutes, 5 minutes out. But nobody was worried about that. Everybody's worried about Draghi. Ed, what do you think about CAD yen? Going long 88.40 or 50, targeting 92. Well, it's a healthy target. Going for the big gains. Look at that huge candle. But Canada just wrecking the yen. So 88.40 or 50 means buying it on that moving average, which it's the moving average is a little bit shaky here. When I see like it's poking through here quite a bit, I'm thinking of like changing that 10 to a 20. And saying, all right, maybe 88, right? Just bounce, bounce, bounce. Maybe try the 20 instead of the 10 here. And maybe try it, which is it says 87.89. So this could work. This actually looks very bullish. Because forgetting about the moving average for a second, this has the look of an inverted head and shoulders pattern. I'm going to take this on the weekly. And we don't run down into it, though, unfortunately, so let me scrap that. We have higher lows. We have equal highs. This it has the look of an inverted head and shoulders, but more accurately, I'd probably call it a really big ascending triangle here. But within that ascending triangle on the weekly, first of all, you've got support here. There's moving average support on the weekly and on the daily. There's the daily on the 20, the weekly on the 20, and you could even say the 10 on the moving average. I think if this gets above 90, it's see you later. Just think of all the people who are going to be trapped, all those trapped shorts if this gets above 90. This has not been above 90 in about 2 years. Yeah, it really does. It begins to look now, if you think about it, it's almost like a very big, yeah, there's that head and shoulders. I thought I saw something that looked kind of like a head and shoulders here. It's like a mutated head and shoulders, like left, head, right. it gets above 90, this could run very far, I think. Maybe you're saying 92, but I see that. I see a resistance area like here, potentially. There's your 92. So I think there's like basically, you see that right here, that one candle. That's like a wormhole from 90 to 92, basically. So I think you got that's the express train from 90 to 92. So yeah, you want to buy the pullback, but you could buy the pullback or you could buy the breakout. There's more than one way to trade that. But I love the fact that the price fell straight down here, which means there's absolutely no resistance between 90 and 92. So that's like the easy part. That's the low-hanging fruit here. That's the easy part of that trade. Theoretically, the price should be able to slide right from 90 to 92. It just has to get above 90. So I like that. I love that aspect of it. Then once it gets to 92, it's going to hit a lot of resistance because of all this mess up here. But you're right, 92, the area up to 92, it shouldn't be that tough to get to 92. Love it. I'm not a crossover guy, so I'm not even going to comment on the crossover. I'm not saying you're wrong. I'm just not going to comment because like there's a lot of different ways you can trade. There's just dozens and dozens. And I'm not saying you're right or wrong. I'm just saying I don't trade that way as far as crossovers. So I'm just going to recuse myself. I'm going to recuse myself from the crossover commentary. Think about it. You've really never heard me talk about crossovers. Okay. Euro USD. Here comes Mr. Draghi. Oh, the jobless claims number is hideous, 298. That sounds to me like there's a state missing. Either that or something just went really wrong in the U.S. economy. 298 on jobless claims sounds like an anomaly, gang. Sounds like an anomaly. Let's go to the Euro USD on the 1 minute. And get rid of that moving average. Go to the 5 minute. That 298 does not look, that number doesn't look right. It's highly unusual to see a number that, because it's a weekly number, it's just highly unusual to see a number that far out of the range or that big of a miss. The expectation was 241, and you miss it by over 50,000. You miss it by 57,000. That's really out of character. I wonder if did the holiday throw it off, and then one of the states did not, their data was not, the hurricane. It's the hurricane. That's why. There you go. Hurricane Harvey threw off the data. Okay, so I think you got to throw that data out. Here comes Draghi approaching the stand. So any move based on this jobless claims, you got to fade it. It's a fake move. The jobless claims data is a false number. It's skewed by the hurricane. It has no basis in reality. Draghi is just sitting down right now and preparing to speak. And Mark was asking about the crossover? I'm sorry, I thought that was Carlos. Ed, what do you think about CAD Yen Long? What do you think of the 26.9 crossover? Mark, I'm sorry, I thought that was Carlos again asking because it was also about CAD Yen. Let me just say this, Mark. Yeah, I'm not a crossover guy, but are we saying on the daily? What time frame on the crossover? Like, we're not even. Do we have a time frame on that? Like, it could be a daily, it could be daily. Okay. I'll pull it up, but I just with the caveat, this is not how I trade, so there's not much I could say about it. I thought I was talking to Carlos there because he asked about the same currency pair. And I'm assuming we're talking about simple moving averages. So I'll fire those up. And it's going to be 9 and 26. Yeah, I mean, that's all well and good. I mean, it could work. Anything could, but like I said, I'm not a crossover guy. I think my feeling about this, and I'll give you my thoughts on this, is that we haven't been above 90 since the beginning of 2016 or late 2015, right? So if you can get above 90, psychologically, think about this. If this price gets above 90, doesn't that mean that every single person who sold short over the last 2 years, if they're still short, then they are definitely losing money? Anybody who sold short in 2016 or 2017 on CAD yen, if this price gets above 90, that means every single one of them, if they sold short, they're still losing money. And once it gets above 90, it's going to be a lot harder for them to justify staying short. That means short covering. And I think that helps to push it up to 92, where that's where the next big resistance is, up here, 92. Why? Because 92 was support here and here and here. And support tends to become resistance. So that's my feeling on CAD yen. Now, whether or not that plays into the crossover, we'll see, right? But yeah, I mean, you could say that these have been interesting, but just keep in mind, right? If the crossover occurs here, then you're not selling short right here. You're selling short right here. If the crossover occurs here, you're actually buying up here. All right. Listen, gang, we're running a little bit late here, so I'm going to jump out, but we're coming back at the top of the hour, and at that time, we'll be able to take Mr. Draghi's words into context, and we'll be back with our second half-hour segment at the top of the hour. So until then, this is Ed Ponsi saying thank you for listening, and I'll see you back here in 30 minutes. Alrighty? Okay, everybody. Thanks for listening. See you back here shortly.